Hey there, it's Jared Hamilton with the Hamilton Group at Cherry Creek Mortgage, and welcome to another edition of Javo with Jared. Hope you guys are doing fantastic. Hope you had a very wonderful week. Just wanted to get with you and let you know what happened with interest rates, and they actually finished the week a little bit worse than where they started or where they ended last week. So rates got a little bit worse this week, and that all happened on Wednesday with the release of the Federal Open Market Committee meeting notes, and I'll talk to you about that in just a bit. First, with the economic data, we did see a lot of information come in regarding inflation. We saw the release of the Consumer Price Index, and that measures inflation at the consumer level. That showed a decrease of 0.1% for the regular rate. The core rate, which strips out the volatile food and energy, that showed an increase of 0.1%. So both those numbers were in line with market expectations. Now, the core producer price index, or the CPI, that actually, for the year-over-year number, the regular index, showed only an increase of about 1.7%, which is below the Federal Reserve's targeted inflation gauge. They want some inflation. They don't want rampant inflation. And actually, with all this low interest rate, accommodative stance, and with this all this mortgage-backed security and treasury buying, what the Federal Reserve is really trying to do is stimulate some inflation. And so despite all these efforts, we're still seeing some pretty tepid inflation numbers out there. So overall, that's probably going to be pretty good for interest rates for the moderate term. Now, the producer price index came in as well. That only showed the regular level just showed a negative 0.2%. Which was a little bit lower than expectations. And then the core rate, which again also strips out volatile food and energy, that showed only an increase of 0.1%. We also saw retail sales come in, and that was actually a little bit higher than expected. That was up 0.4%. And just with Thanksgiving being so late this year, we might see some of this holiday buying happen a little bit sooner, and it showed that people are out there buying goods. So that is good overall for the economy. We also saw existing home sales come in, and that was actually a little bit worse than expected. Market was expecting about 5.2 million units being sold every year, but actually the number came in at 5.12 million, so a little bit less than what the market was hoping for. Nothing huge. Now, again, what caused the rates got worse by about 0.25% on Wednesday, and that was all due to the Federal Open Market Committee meeting notes being released. And, just historically over the last few FOMC meetings, these notes, when they get released, it hasn't been very, very friendly. And so that trend continued. And the reason that rates got worse is because of concerns over maybe tapering happening a little bit sooner than what the market was expecting, at least this week. So now, expectations have changed a little bit. The Federal Reserve did say that they're going to maintain a very low interest rate policy for the foreseeable future. So we're not going to be seeing any increase to the Fed funds and discount rates. So they're not going to be, kicking up interest rates. But they did say that they will begin tapering not too soon, but just as soon as the economic data suggests that. And they went on to say that the Federal Reserve believes that economic conditions will warrant tapering in the coming months. They used those words, in the coming months. Now, this was the exact same verbiage that they used back in May and June when we saw interest rates just actually get hammered and increased about 1%. We saw a real big increase there. Well, it didn't happen really this week. It was only about 0.25%. And the good news is that happened on Wednesday. We did not see that follow through on Thursday or Friday. Actually, Thursday, it improved a little bit. And today, we're just kind of holding steady. So, again, there's going to be, focus on this. But here's the also results of that FOMC meeting. It's pretty apparent that there's real no consensus. So they're real unsure about how all this is going to work. So right now, I guess the markets may be expecting that we might see some tapering happening in the spring. But, who knows? So there'll just be some volatility as everybody tries to guess. Now, next week, the market will have to digest, to use a Thanksgiving word. We're going to be digesting turkey, but the market's going to be next week. The market's going to be digesting a lot of information from the housing front. We'll see building permits come in. We'll see housing starts come in. We'll see the Case-Shiller index come in, and we'll also see pending home sales. So a lot of economic data to digest here on the housing front. I'll get with you on Wednesday a little bit early just to let you know what happened with that. Hope you guys have a very wonderful weekend. If you're working this weekend, so are I, so are we. So please give us a call if you have any questions. Have a wonderful weekend, and we'll talk to you next week. Thanks a lot. We'll talk to you soon. Thanks for joining me at Java with Jared.